Wells Fargo upped its price target from $60 to $75, implying a 15% upside from here. Let's bring in the analyst behind the call, Ike Boruchow, senior analyst at Wells Fargo Securities. What kind of visibility did you want that you got?
Yeah, thanks for having us. I think it's twofold. I think there's two things on revenue that are really starting to take hold. And remember, we're about 12 to 15 months into new CEO Elliott Hill's tenure, so the timeline kind of makes sense. But number one, the biggest headwind to this business has been what they call the classics. This is Air Force One, Air Jordan 1, and Dunk. It's been a big headwind on the business for multiple years. We think it's going to be about $6 billion being erased over the last 2 years. Our call is that that's going to hit some level of stabilization going forward. So basically,
why?
A bad guy.
Why do you think it's going to stabilize?
Because of the work we've done on prior big franchises in footwear, namely franchises like Old School with Vans or Stan Smith with Adidas. You can kind of see that, as well as many industry checks that we've already spoken to. So bad news gets less bad. Now, the good news is the non-classics footwear has meaningfully accelerated growth. So we're up in the 20% range, and apparel is growing. So if I got the good guy growing, the bad guy getting less bad, there's an inflection in revenue that's on the horizon. That's where the call really starts.
What about consumers and this bifurcation that's happening? We're seeing it, I cover gaming and lodging and other leisure and hospitality companies. It's so divided and it's so stark. Are you seeing that in retail as well? I mean, is Nike facing that both in the United States and, I don't know, elsewhere around the world?
Yeah, I think the U.S. consumer, and I think the consumer in general, is a question mark. But I think two things to keep in mind: one Nike specific, one U.S. macro specific. I think there's views that holiday is going to be a little bit challenging. That's why this group has been under pressure. However, early 26 does seem to have some tailwind, whether it's tax refunds or stimulus. Couple $1,000s extra in people's pocket. You don't really remodel your house with that. You buy an extra pair of sneakers, you buy an extra handbag, you go shopping. So that's a tailwind. Now on Nike, incremental innovation so far has worked. You're talking about silhouettes in the performance running channel. Think about Vomero 18 has been a resounding success. Pegasus relaunch. So they're making inroads. So the green shoots are creating better visibility. So again, you got to crawl before you walk in with discretionary. You want to be early with these names. Under earning, revision activity. That's why maybe you're a quarter early before the inflection, but that's how the group works. That's how you have to invest in discretionary.
What are you seeing in terms of China? The fact that it looks like there has been some ratcheting down of rhetoric, some stabilization in what we're expecting for tariffs. How does that affect Nike's overall business?
Look, China's a bad guy in terms of the fundamentals of the story. The marketplace is still full of product. You got to work that down. They got to rethink strategy. The good news is China's 15% of sales. North America's 50. The 50 is working. That's really where we want to focus. And the checks we've done in China would suggest that the marketplace cleanup in China for Nike probably doesn't get complete till summer 26. The good news is that now then adds another layer of margin opportunity and upside growth into next fiscal year on top of what we're already talking about today. So I kind of view that as gravy to the multi-year story.